and today I took one trade on Tesla for around a $2,400 win. So a really nice day today. So today I'm gonna pretty much be talking about what the market did and pretty much what opportunities there were, right? So the market's still open, so we can see the market's recovering quite a bit, right? SPY QQ had a nice recovery from kind of this kind of choppier in the morning, but yeah, so we're still in that range on the higher time frame on QQ and SPY right now. Us kind of reclaiming this level doesn't really mean too much anyways. Wait, what pop up, right? Even on the higher time frame now on QQ and SPY, we're still kind of just bouncing off this area now. So still very choppy on QQ and SPY, but nice recovery though for people that are have long-term investments, right? And I wanted a bigger dip because I wanted to buy, but you know, AMD's having a nice push up. Nvidia semiconductors just look strong. But yeah, so let's get into a trade recap, right? So today I took one trade on Tesla. So I'm going to talk about pretty much right what I saw today and how I executed. So this session, by the way, was recorded live. So pretty much right, recorded live, talk about my entries, my exits, pretty much what I saw, even beforehand. So that will be an insane video to watch, right? Like especially if you don't know what you're doing, right? Talked about a lot of important things. So very good content, especially if you are a new trader or you're struggling, right? Very good information. So make sure to watch that. This is just a recap of what I already did. So yeah. So let me pull up the Discord, right? 8:15 gap down the market, so we'll be waiting for a reaction on QQ and SPY in the first 10 minutes. If QQ SPY breaks below pre-market low, Nvidia and Tesla or any name show weakness under our previous day low plus pre-market low on watch. If we reclaim levels on QQ and SPY, then we can expect a potential reclaim of our previous day low on those names. And then I'll be watching Palantir and also any name showing strength, right? So I mean, just a very simple game plan, right? Pretty much main thing is to watch what price does, and that's what I did, right? So at 8:37, Tesla puts my main watch we show weeks on QQ and SPY. Tesla puts on watch in Tesla puts, and then very nice trade, right? Pretty much an instant retest of this pre-market low plus 388 plus this fair value gap. So very nice. Also, we're bearish in the higher time frame because we're below our previous day low and our pre-market low. That's why I was looking at this name a little bit more than other names because we're also bearish on our higher time frame below our previous day low and our pre-market low when I take the trade, right? So stop loss is very minimal, right? Literally above our pre-market low, so we know the risk is very minimal, right? So QQ and SPY weak. So I'm just talking now as in the trade, right? QQ and SPY clearly have room to our pre-market low. I don't think we ever hit our pre-market low on QQ and SPY. We end up reversing, but yeah, no. So we ended up reversing QQ and SPY, but that was the area that I expected SPY to kind of hit and then kind of bounce off of. But we ended up actually reversing a little bit sooner. But because the name we kind of chose had relative weakness, right? The name I chose was the right name. We had that nice move down on Tesla, right? A very nice, what did I say? Like a nice $6 move on Tesla. Very clean move. So that's kind of what we want to see. So simply, right, entered on this weakness, entered actually on this candle, this confirmation candle right here, stop loss above this pre-market low and a candle closure above, and simply targeting these key levels down low. Well, I won't be talking in this video about where these key levels from. I'll kind of gatekeep that for now. But yeah, no, very nice trade. Very simple, right? I pretty much waited for QQ and SPY first 5 to 10 minutes kind of form. Saw QQ and SPY were kind of bearish because they're opening below our previous day low level, right? Kind of waited to see if we're gonna show bearishness on QQ and SPY ended up breaking our 5-minute range low under VWAP, and same with QQ, right? QQ also breaking underneath our 5-minute range low plus VWAP, so kind of was looking to short some names with that with weakness, and Tesla fit that criteria perfectly and entered off this strong kind of instant retest of this pre-market low plus fair value gap, stop loss above this pre-market low. So very nice entry and very nice move as well, right? Very nice move on Tesla, around a 40% move, right? Unfortunately, didn't really trim at these lows over here because I got stopped down my trailers at this position, but ended up taking majority of my position off at these lows right here. So that's very good for me. But yeah, no, now the market's just recovering, so nothing really too crazy to talk about. But yeah, let me go open the back of the Discord and kind of talk about so 845, 10%. Interesting AMD because AMD had a really unusual pop while kind of were weak. Tesla, very nice continuation, held market structure, 25%. Scaling TP2 here, out majority, and then 30%, and then out Tesla trailers at this kind of invalidation of this. This is actually not the right photo, but entered. I exited my Tesla trailers right here, right? So kind of exited my trails a little bit preemptively just because I wasn't trying to hold a little bit too much in a deeper pullback because I only had a couple contracts left, right? So I'm not trying to, I don't really care as much, right? Unless I'm holding a lot of contracts, then like, actually, that doesn't even really make sense, but I had a little bit of context. I didn't really care too much to hold through it, so I ended up ending closing my position out in this fair value gap. But we kind of ended up respecting this fair value gap perfectly and ended up just dumping down. So that's very unfortunate, but it really wouldn't have made that big of a difference on the P&L anyway. So I'm not too worried about that. But yeah, so let me open this back up. AMD huge pop. Might play with profits on this name. AMD calls on watch, but on AMD, right, really didn't have any entry. If you look at AMD right here, we had a pullback, but really no reaction at this area. Even if you entered aggressively on AMD, your stop loss would have been below this pretty much just these two key levels, right? Previously close plus 5 range high, but we ended up just breaking under, so choppy price action. And also this is low probability just because QQ Inspire is still in range, so this is more of a lotto setup, right? As I even mentioned, so if I did even take this, right, would have been with profit, so nothing too crazy, right? The only A plus setup I took today was on that Tesla trade. Every other setup, by the way, in the markets were trash. Like I'm saying this like with confidence, by the way. Every other setup in the markets were trash, literally trash. This was the only setup. This setup I took on Tesla was the only setup that had continuation and looked good. Every other name looked trash. Of course, now that we had that upside move on Tesla QQ, I mean QQ Inspire, right? Like maybe there were some opportunities, right? Maybe you could have gone opportunity on AMD to long AMD, right? Especially above this 194 area. It looks very nice, right? Also Nvidia, but that's a little bit later in the market, right? This is also 10 o'clock, so really who's trading that late? But yeah, so that's pretty much the trade cap for today. How long is this video? 6 minutes long, so nothing too crazy, right? I just literally followed my game plan, even called out Tesla puts is my main watch. And why was Tesla puts on my main watch, right? Tesla puts was on my main watch because Tesla, right, is the only name that was kind of showing bearish price action. Plus, it was below our previous day low and also below our pre-market low, right? Whereas Nvidia was below our previous day low, but I mean my bad, was below our previous was below our previous day was below our previous my bad below our previous day low, but wasn't below our pre-market low, right? So Tesla looked the most bearish because we're below both our previous day low and our pre-market low, right? So on the higher time frame, Tesla looked the weakest, right? If we're below our previous low and our pre-market low, right, that's extremely bearish price action. So we can look to target these areas of liquidity right here, as well, right here, and then right here. So yeah, I mean, that's pretty much trader cap. I mean, I think I talked about pretty much everything, right? Very simple day. If you're able to pick the right names to play, like today was a very simple day. The only name that even did something was Tesla. So every person that you kind of know or like in the option space, if they didn't take Tesla, they're taking other names, and something is not right because there's nothing you shouldn't be taking anything on any other name. Doesn't even make sense, right? We're all in a range. Besides Tesla was the only one kind of showing that bearish price action. Unless you're trading QQ and SPY, that's a whole different type of story, right? Because QQ and SPY have completely different price action. But yeah. Oh yeah. So let me answer a question for one of the people in my server. So let me go right here real quick. Trading chats. Um. So this person in my server had a question. Uh, let's see here. So what do you mean by cons buying at the risk reward I play? Could you please elaborate? Let me patience. So how do you find the risk percentage based off the charts? Okay, I kind of get what you're saying. So he's saying, what do you mean by cons and buying at the risk reward? So think about it. If I'm buying, so Tesla's a bad example because Tesla usually has increased, like the contracts are expensive, right? So this is a bad example, but like the contracts I bought in Tesla, right? Today I bought the 272.5 puts, right? And so, right? I don't even remember. Yeah, that's 372.5 puts, right? So those contracts, right? I'm buying that at around $2.60 price range, right? So if my risk to reward, right, is simply less than $1, right? The contracts I'm buying are like not in the money because Tesla contracts are extremely expensive. So this is a bad example, right? Bro, Tesla's just a bad example to begin with. That's why I didn't want to type it out. Let's just ignore Tesla and think if it was AMD, right? AMD, the contracts I usually buy would be one in the money or one out the money, right? So I'm buying the one contract that are one in the money and there are one out the money, right? These are usually contracts that are kind of will hold their prices better, right? If you're buying five out the money, right, they're very very volatile, right? Whereas we buy closer to in the money or in the money because we want our contracts trying to hold price in those pullbacks, right? Of course, a smaller reward, but it's better risk management, right? And all what we're supposed to do in in options trading is right. We're supposed to manage our risk. Like we're supposed to manage risk and look for those continuation steps. Right? We're supposed to target those bigger risk to reward plays. So I know if my risk, think about it, it just makes sense like kind of logically, but there's also not a lot of logic involved in this. Like that I can't explain, right? It's really complicated. But look, listen, if I'm risking, if I enter at this candle, right, and my stop is less than a dollar move on Tesla, right, that is around a what? What's a dollar move on Tesla? That's around a what? A 10%. Even if I get a big spike up, including that big theta spike, right? That big spike on options that'll kind of spike the price and make me lose more value on my contracts, right? That'll still be around 10 to 15% in one spike just because my risk is so small, right? It's not something that I can kind of explain. It's more like experience. Like that's just I just know which contracts I'm buying, how they kind of hold in those scenarios. If you're buying even more in the money contracts, like the $10 ones, $11 contracts, then this move will be like less than 4%. Like it'll be nothing. It'll be like such a small percentage move, right? Whereas the one I'm buying is more out the money, so it's gonna have a bigger percentage gain, right? I mean percentage loss, but also more percentage gain. And I'm also buying with that premium spike, knowing that this is a bearish. This like I'm buying this knowing that it's in that bearish trend. So there's like a lot of things that like it's just hard to explain. It's like I'm more better as a trader than like explain like the Greeks and how the contracts like that's a very complicated topic. Like it's really hard to explain. But the simple way is that I'm just simply buying. The risk reward is very good, right? My initial risk reward by the trade was this to this, right? Very simple, 1 to 2, very simple, but also this is an area of key liquidity, right? If you can break this area, right? My next TP will be this area, right? And then my final TP will be this area, right? So technically, I'm aiming for a 1 to 8, a 1 to 6 risk reward on this trade. But if we look at it like more like numbers wise, right? My risk is less than a dollar on Tesla, while my reward is more than um like around $5 on Tesla. So that just makes sense. Like risk to reward wise to play the name. And you said contract. You also said something about what do you mean by cons buying at the risk reward? So if I know that my risk reward is really good, then I can buy more contracts, right? Because I know my risk is well managed. Like let's say for example, right? Like if my risk reward is really big, right? If my risk is all the way up here, then I'm not gonna buy 50 contracts risking $3,000, $4,000 of this big ass move, right? I'm trying to but if my risk is way smaller, then I can size heavier on my trades, right? Buy more contracts knowing that my risk is way less and my reward is still the exact same, right? Like if my risk reward is this big, I'm not trying to put more money into a trade. I'm actually trying to put less money into a trade, right? But if I know my risk is way less, I can put way more money into this trade, right? Knowing that my risk is well managed, right? Even though like it's hard to kind of specifically manage when you'll kind of get at this trade, it's in that range around 15 to 8%, right? There are some trades where my risk reward is so good and my risk is so well managed that like I only lose 8%. I lose less than 10%. But there's some trades where I'll lose 20%, right? Especially on Friday. There's some trades on Friday where I'll lose 30%, right? And that's just something you just have to understand, right? Especially when you're playing 0 day contracts on Friday, right? That's just normal, right? Of course, you want to size down and understand that, but if we're talking about normal contracts, right? That's just how it is. Like my risk reward is so good that I can't be more aggressive, be more confident, knowing that my risk is way less and my reward. First of all, the trade looks good, the SEP looks good, this is just an A plus SEP, right? And my risk is really good, so I can size heavier, be more confident. There's also that kind of like psychology barrier when you're entering these trades. That when you know it's a good risk reward, you can size up easier, right? Whereas when you know this trade shit, you don't want to size up more, right? That's what you're not supposed to do. Like, and so when you get to the point where you're only taking A plus apps, right? There's some A plus apps that are different than other A plus apps, right? This app was an A plus, this A plus plus app, right? We're below our previous day low, our pre-market low. QQ Inspire is bearish underneath our VWAP plus 5-minute range low, right? There are all these factors. Plus Tesla is also showing relative weakness, right? So you can kind of like there's so many types of ways to trade, right? Everyone has their own scaling, their own kind of ideology and how they kind of like enter based on what sizing they want, right? It's really hard to kind of have a like logic, I would say, right? Like in the bigger term, but like in the smaller term, right? It's very easy in the way if I describe it, like, look, the risk is small, the setup looks good, I can size heavier. But if the setup is good but the risk is bigger, right? Where the risk bigger mean that a trade will get invalidated if we break this level, then I'm gonna size way less, right? Because I know, let's say for example, let's say for example, right? Let's say just simple market structure, right? We want to see higher highs, higher lows, higher highs, higher lows, right? Simply, we see us respecting this fair value gap, right? So if I were to take the good entry, right, in this trade would be right here, stop loss below, right, this fair value gap plus this key level, right? This would be a good entry, right? A good risk reward. You could target a 1 to 2, right? But technically, you want to target key levels, right? Key areas of liquidity where you want to know prices gravitate towards. So right here, right? So that's a good risk reward, right? I can enter a little bit heavier on this trade, knowing that my reward is way bigger and the setup looks good, right? QQ spy look good. Whereas if I'm entering way later, like if I'm entering and my entry is trashed, right? Which I would never enter a trash trade because I know how to make money in options, right? You don't make money in options long term entering shit setups, you know? But let's say, for example, I entered all the way up here for some reason, right? Just based off some random bullshit, you know? Your risk to reward, right? Like there's first of all, there's no kind of risk, there's no market structure, but your risk now would be the exact same area market structure wise, but your reward now like doesn't make sense. Now you have to make it such a big reward. So your sizing, right, to be confident would not be the same. Like you would not size 50 contracts here being confident rather than like over here, right? Because you know this has actual like market structure and a good support area behind it rather than being aggressive. You're not going to be aggressive in this area if that makes sense, right? And to calculate like your stop loss and that stuff, that just comes more from experience for me, right? It doesn't come from me being smart. It just comes from more from experience and me just seeing how the contracts move and how many times I've gone stopped out and how many times I've hit my TP and how many times I've bought the similar contracts and how similarly the price has moved, right? That's just something I just can't explain. It's just hard for me to explain, you know? I guess I talked a lot, but like I hope that makes sense a little bit, you know? It just depends a lot about like how good the setup is and how small the risk is. I can size a little bit more. Like honestly, if I really wanted to, I could have bought $20,000 position size, right? Knowing that my risk is around a 10%. So my risk would be around 2 to 3K position size. But I got 40% on this trade technically, right? The contract is 40%. So I would technically no, my bad. 220K position size, 20 uh 10% stop loss. Yeah, so 2K. I'm risking 2K to potentially make 40%, to potentially make 4K and beyond. You know, like it's just okay, bro. I'm just talking too much. But yeah, that's pretty much a trade cap. I don't know. I'm talking too much. I hope that I kind of helped you a little bit, but I might have even made it a little bit more complicated. But just take a step back and go back to the basics. Just look at it like from like an easy point of view, right? Good entry, right? Good entry, very small. Like think about it. If I'm buying literally right at this rejection candle, right? My stop loss is literally right above this fair value gap plus this pre-market low, right? Very small stop loss, so I can have bigger position size, knowing that my risk is so minimal, right? And how do I calculate that risk is in options. It's really hard to calculate it, right? Because there's so many things that can happen. A small green candle or use like you know, there's so many things, right? But you know around the range of what you'll get stopped at, right? That's what you kind of have to understand, right? That's the kind of like skill bear there isn't training. You just kind of don't know exactly, but you kind of know in a range of what you're risking, you know. And so yeah, um, man, I dropped you a whole ass fucking course. I won't lie. Um, but yeah, what's the market doing now? Just chopping, consolidating. No one should be taking trades in this market, to be honest. Besides QQ and Spy, honestly, QQ and Spy does have some volatility, but yeah, that's pretty much trade cap. I know this is a way longer video, but I ended up answering that question, so that's why. Otherwise, the beginner trade cap had a lot of information. So yeah, don't forget to like and subscribe, and peace.